The Exchange at 25 Broad, sponsor of this webcast, invites you to visit our remastered model residences.
Good day, I'm Jen Benepe, covering for Abby Overton, and this is The Real Deal. At the top of the news, the city and the state finally agree on a compromise 421A bill. Thor Equity's Coney Island development was declared dead by a New York City official, and Larry Silverstein borrows $700 million for the largest ever residential loan in U.S. history. That and more on The Real Deal webcast this week. But first, some highlights from this week's interview. Solve this riddle and you'll know the answer. Who is the councilperson from Queens who longtime residents love and some developers hate, all for the same reason? Earlier, I sat down with, you guessed it, Councilman Tony Avella, chair of the City Council's Zoning Committee. He is also known for battling developers he says are unscrupulous, out-of-character McMansions and multifamily monstrosities.
Queens has become the development paradise for a lot of real estate construction firms. And that's not necessarily a bad thing. But there has to be a balance between development and neighborhood preservation and neighborhood quality of life.
Some developers might say that downzoning drives down property values and prevents necessary economic growth or needed housing in a neighborhood. Would you say that that's true?
That's absolutely false.
For the full interview, click on the link below. And now for the news. The city has agreed to endorse a state bill reforming the 421A tax abatement program. The agreement was made in exchange for new changes that ensure city-financed middle-income developments will be built. The Bloomberg administration had feared the earlier version of the bill would make middle-income housing developments like the planned Queens West impossible. The bill is expected to easily pass the legislature when it next convenes and be signed by the governor. Dead in the water were the words used by a high-ranking city official to describe Thor Equity's $1.5 billion plan to redevelop Coney Island. The Bloomberg administration is unhappy with the developer's plan for 350 timeshares in the proposed Las Vegas-style resort, as well as Thor's push for $100 million in subsidies. Thor's sale of the Albee Square Mall in downtown Brooklyn earlier this year led to fears that it might also sell on Coney Island after receiving a favorable zoning change. The city official said Thor must scrap his current plan and come up with a new one before the city will meet with the developer. Later in the week, Deputy Mayor Dan Doctoroff offered a land swap proposal to get plans moving again. Larry Silverstein has secured a $700 million construction loan for River Place 2. The massive rental development plan for West 42nd Street and 11th Avenue will comprise over 1,300 rental units in two 58-story towers. It will also include 21,000 square feet of retail space and a 13,000 square foot amenity center. Approximately 20% of the units will be affordable. The loan is the single largest residential construction loan ever closed in the nation, according to Cushman & Wakefield, Sonnenblick Goldman, which arranged the financing. Dubai-based investment firm Istithmar, a big buyer of New York City real estate in recent years, will pay $942.3 million for Barney's New York. Istithmar won a bidding war for the retailer against Japan's fast retailing company, which lasted over a month. A spokesman for fast retailing company said last Thursday that another bid would no longer be rational from an economic standpoint. The New York Mercantile Exchange is fielding offers for its Lower Manhattan headquarters ahead of a deal to sell itself to a rival exchange. NYMEX is asking between $600 and $700 million for the 15-story, 500,000 square foot building, which is located at 1 North End Avenue in the World Financial Center. The property may sell for even more than that because it's only 10 years old and has state-of-the-art trading facilities. Potential buyers that have toured the building include Larry Silverstein, Brookfield Properties, Citigroup, and Merrill Lynch. Development site located at West and Leroy Streets on the Hudson Square waterfront has traded for $34 million. Buyer Peter Moore Associates can build a commercial project of up to 88,000 square feet and is likely to include a luxury hotel component. The properties represent one of the last significant development sites in the neighborhood, according to broker Eastern Consolidated. The site at 6th Avenue and Grand Street that was home to the Moondance Diner has been sold for $33.5 million. A partnership including Extel Development purchased the parcel comprising 23 Grand Street, 27 Grand Street, and 74 6th Avenue. The diner is moving to Wyoming, and a 9-story condo is planned for the site. Thank you for joining us for this edition of The Real Deal's webcast. Remember to click on the link below for this week's interview. Make sure you join us next week for a special segment when Grammy-winning artist Moby takes The Real Deal on a tour of his 2 unique properties in New York. One, the Dome apartment atop the El Dorado Tower, and the other, the Eric Clapton Chapel apartment. In the meantime, please join us every week for the latest in real estate news. I'm Jen Benepe, and this is The Real Deal.